The UK election saw the Conservatives lose their majority government status and having to cobble together an alliance with another party to keep the government going. We've had a lot of action in the pound and along in the UK markets as well as in Europe on this news as traders try to digest the prospects of what happened in the UK election. What does it mean for Brexit negotiations, and what next for the markets? Well, looking at this, the Conservatives' hand, it would seem, has been weakened a little bit. The push towards a hard Brexit may have eased a little bit, and we've seen that perhaps we may end up with a bit more of a softer Brexit stance going forward. The loss of the majority, considering that Prime Minister May had gone into the election trying to strengthen her hand by weakening her hand, in fact, it's actually undermined their negotiating stance a little bit. Brexit negotiations are still expected to start on June the 18th, so in the coming week, we could see a lot of posturing from both sides as we start heading into talks. Well, what does this mean for the markets, and what is the market telling us? Well, let's start here with the pound against the US dollar. To no surprise, the minute the exit poll came out showing that the Conservatives could lose their majority status, the pound got crushed. But what's interesting here when we look at this, though, is that we came back here to this completed hit this Fibonacci level here, a 38% retracement of the previous advanced 126.35, bounced up off of it, and since then we've actually managed to come back up into this area here between these Fibonacci levels, 127.10 and 127.90. We have broken the 50-day average, holding well above the 200-day average. RSI has turned downward and broken 50, not a surprise, broken its previous low, so we are seeing a bit of a downturn here. Could we even call this a weak head and shoulders top, left shoulder, head, right shoulder, and a neckline break there potentially as well? So we are seeing a bit of a rollover in the pound here. We could see the pound, although it has bounced for now, it may remain vulnerable in the coming days. The question is how much of a setback does the street see this, and how low could it go in the near term? But watching here, this 200-day moving average is around 125.75, and so far this golden cross remains intact as we head into the Brexit vote. Now, what's intriguing is that in the FTSE, we actually are seeing another head and shoulders top. It's interesting. We had a head and shoulders top back here in March that failed. Now we've got another one forming, and what's really interesting is we've had, of course, the UK stocks trading in the opposite direction of the currency, feeling that the lower currency beneficial for UK corporate earnings. So, especially for multinationals. So what's interesting here is, so when the pound collapsed, no surprise, the FTSE rallied, but it didn't get very far, and in fact this shoulder resistance here around 75.30 has actually held, and so now you're actually, if anything, forming a right shoulder here. You've had every reason for this to go up, and it's kind of stalling out just about 7,500, 75.25. It would need to push through here and get closer to 7,600 to suggest we're seeing a more serious upturn. Interestingly, though, with the RSI, we did see it hold 50 and bounce up off it, so the underlying uptrend is still intact, as we see with this test of holding 7,400 support here. So we'll see what this one's going to happen, but we are seeing a bit of mixed signals here. We do have a significant top forming, but we also have some signs of underlying support. What's interesting, though, is when you look at the Schadenfreude trade. If you figure that the UK's hand has been weakened by the election, you think, well, that should strengthen the hand of the European Union, who have been strutting around saying, well, we're all united, and you know, they're going to put the boots to the UK and make an example out of them to scare all the other members from and anybody else from trying to exit their empire or what have you. But what's interesting about that is you're not seeing that play out in the euro. And in fact, if anything, look at this, we're actually seeing signs of the euro rolling over. It's broken 112. We had a new high in early June, not confirmed by the RSI. That's a negative divergence there. RSI sliding towards 50 tells you upward momentum slowing, could be setting up for a downturn. Next support around 111.80. On a day when the euro should be going up, it's going down. And even when we look at particularly at the cross-channel cross, here, the euro against the pound specifically. Okay, the euro did break out briefly above 88. This is the top of a trading channel here. Unable to hold it, came back down. And in fact, look, there's this negative divergence here. That high was not confirmed by the RSI. We're trading back below 88. We would need to break 88, hold it, and to signal that we're continuing to work upward. First resistance would be around 88, 70, 89, 89 and a bit. The point is, though, that the euro is not capitalizing on this so-called setback for Brexit. So, in fact, if anything, it's appearing that that probably the Conservatives did still win the election. They do still just barely, with some help, have a majority. But all this seems so that it doesn't seem as though it's not necessarily derailing the drive towards Brexit. But on the other hand, the negotiations are likely to continue, and but we may, and who knows what kind of a deal we're going to get at this point. But overall, I would say though that the UK market action and the euro market action are telling us that the street isn't seeing this as a crushing defeat for the Conservatives, more of a setback that could provoke a rethink in strategies.